Welcome back. I'm Pratap here. Today is 15th December 2023. If you visited our channel first time, please understand we are providing free training on supply demand zone price action theory. And you can visit our NeoStock YouTube channel homepage. And there you can click on the homepage and scroll down to the playlist Supply Demand Zone Price Action course. All the training videos are available under this playlist, starting from the lesson 1.1 until the most recent lesson. Even all the upcoming lessons will be placed under this playlist. So please make use of this opportunity to learn supply demand zone price action theory. Now let's get into our discussion. So let us analyze the high liquidity zones identified in our yesterday's video from daily time frame and 75 minutes time frame. The first stock we identified is Astral, and today it is on the daily time frame, stock near the daily demand zone, and today prices did not enter into this zone. That means we didn't get the trade. The next one is Apollo Hospitals. So this is a high liquidity supply zone, daily supply zone. So as usual, what we did, we went one time frame below, that is 75 minutes time frame, and there we identified a fresh 75 minute zone. We have a rally candle, 3 base candles, and then we have a drop candle. Even though this is looking like a rally candle, it is a drop candle. Because prices from here it went down and after that it was recovered. So basically it is a ERC candle. So then went to the 15 minutes time frame. In the 15 minutes time frame, identified a drop base drop. And further we fine tuned at 5 minutes time frame to find our entry point or entry zone. Look here, we have a drop candle, 2 base candles, and again a drop candle. And today we got the entry. At 1 o'clock, 10 minutes, the price entered into this zone. See, the moment price entered into this, how the existing pending orders in this fine-tuned 5 minute zone pushed the price down until its next 15 minutes zone. Let me go to the 15 minutes time frame. Here we have a leg in, base candle and a leg out. So again prices entered into this zone around 2 o'clock. And Apollo Hospital has given a profit of 4,837, and which is equivalent to 3.91%. That means almost close to 4% return on the investment for one future slot, because we always calculate ROI, return on the investment, that is ROI on future slots. So this is one successful trade. And the next one is Cholamandalam Finance. Even we got an entry, but unfortunately completely struck up in here in the trade. Let me show you how. So it is a daily zone, and inside the daily zone we identified a 75 minute zone which is fresh. We have a drop and 4 base candles and a drop. And again what we did, we went one more time frame below, that is 15 minutes time frame. All these steps I have explained yesterday in yesterday's video. Same procedure we are following. Here we have a drop and we have 4 base candles and a drop. So this entire thing is a 15 minutes area. Because the risk is very high, See, if I draw, the zone will be like this. Because the risk is very high, we cannot trade. So what we did, again went to 5 minutes time frame. So this is the 5 minutes time frame. In this 5 minutes time frame, we identified a very beautiful zone. We have a rally, two base candles, and an excellent leg out. So that way we identified this is a good zone. Actually, this zone is a good zone. It is having a lot of liquidity. But what happened today? Today the demand is also very strong. It is very strong from this area. Institutions keep on pushing the prices. But this particular pending orders in this zone, the 5 minutes area zone we fine tuned, it is still keep pushing. Every time prices enter, it is pushing. And some more pending orders are consumed, again it is pushing down. Some more pending orders are consumed, again it is pushing down. That way, it is not, prices are not reached into our target. So when prices not reached into our target, what will happen? We are struck up in the trade. At some point of time, we have to exit from the trade. Previously, we discussed different techniques for exit when the trade is not really going to reaching our target. There are different techniques we followed previously. So one of the techniques is from where the rejections are coming, we need to identify, and from there you need to draw a line, and after some time you need to exit. But this is too early to exit because we got the trade at 9:55 candle, and by the time here it is 11:40. Probably till at least we have another 1 hour or 1.5 hour. Who knows? Sometimes again prices may go down, and after some time prices may go down and reach the target. So definitely some patience should be there, but somewhere around 1 o'clock or 1:30, we should find an exit point most of the times. But here the problem is the prices are very near to the supply zone. Near the supply zone, we have these rejections. If that is the case, a little early you have to take a decision. Maybe somewhere here around 11 or 11:30 you need to exit. At this, whatever the support line we have drawn there, we need to exit. Still, even if you did not, in case, now what happened today? Again a new supply, a new 15-minute supply is created at this area. See, we have a drop, and then we have a base candle, and again we have a leg out candle, ERC candle. After that, we have the follow up through candles. And finally, prices reached to this zone at 2 o'clock. So that is our last opportunity to exit from this trade. Even though we did not get the loss, but our entire trading day is struck up in this stock. If we would not have taken an entry in this stock, definitely we might have got some more opportunities in some other stocks. That is what I am trying to say. But sometimes it happens because when we have 3 or 4 trades in our hand, which trade you will select? Randomly you pick up the one you feel is the good, but that trade is struck up. So you have to live with that. At some point of time we have to exit. That means that morning at 9 o'clock or 9:45, at 9:45 candle, you got the entry. Till 2 p.m. we struck up in this trade. And finally we exited here with a very, very minimal profit. And that way Cholamandalam Finance, if you would have exited in this newly created demand zone area, Cholamandalam Finance would have given 2,625 rupees profit, which is 1.66% return on the investment. But one point we should observe, it did not hit the stop loss. The reason it did not hit, the supply in this zone is very, very strong, even though the demand is very strong today. So this is one typical kind of trade we have seen for the last 2.5 months. See, most of the times what happened, we got 94 successful trades. Out of 100 high liquidity zones we identified, It's not we identified. The 100 high liquidity zones executed. That means they are triggered. They reached the entry point and trade is triggered. Like that, we identified 100 zones. That is what yesterday's video we have discussed. Yesterday, the count was reached to 100. Out of those 100, 94 trades are successful. And we have never seen such kind of scenarios. This is the first time we are seeing such kind of scenario. And remaining 6 trades are stopped out. So that happened immediately after some time. But it's not like the whole trading day is moved within a very small narrow range and what to say, it made us struck in the entire trading day. But anyway, it's another important lesson we should experience. Generally, it won't happen like things won't happen like this in high liquidity zones. The reason is like high liquidity zones are having a lot of liquidity and it will push the prices down. You know, when such kind of situation happens, there is a new institution entered somewhere in this area. And they keep on whatever the blue color line I have drawn, probably they keep on adding the orders in this area. The new orders they keep on. Each time prices are coming, it is pushing up. Again coming, pushing up. Again prices are coming, pushing up. That means there is a big fight between this existing supply zone and the new demand added by the institutions in this area. Rarely it happens. So this is such kind of stock we have noticed it today. And the next one is CUB, City Union Bank. And we didn't get the trade in this stock. Prices didn't enter into the area. And next one is Idea. Idea completely avoided, though it didn't enter into the area. I'm not happy with this stock price action, especially on 5 minutes time frame and 15 minutes time frame. If you get into the 5 minutes or 15 minutes time frame, the chart is looking like something like a machine is plotting the graph. Maybe, I don't know, maybe all these candles are, it's like a, it's like a painter is painting on a canvas. It's not the painter, actually it is a machine is painting. Probably what I am thinking, there could be so much of algo trading is happening in Idea. Then only probably you get such kind of candles. See, all these candles look like a systematic. The open of this candle and the open of the previous candle are same. Open and close are same. Probably a lot of algo trading might be taking place in this. So that's why I didn't felt convenience to focus on this stock. So next time if a system shows this stock, simply I will ignore. So maybe I am not recommending Idea. And next one is National Aluminium. National Aluminium is stopped out. So completely stopped out. We have two zones. National Aluminium is there in high liquidity daily supply zone and also 75-minute supply zone. See this one, the below, the one we have drawn is a 75-minute supply zone. Why we avoided this trade is 5 minutes data is not available in TradingView. Because it is somewhere from 2002 this zone was created and TradingView data is not available. So we are not in a position to look inside the price structure of the 5 minutes. See why this why this high liquidity 75-minute zone is violated. It is violated as per our zone violation rules. Look into the structure. What happens to such kind of zones? Base candles 1, 2, 3, 4, 5, 6, 7, 8. All these are all base candles. See how easily the price violated here, this zone. So here with a gap, today prices opened with a gap, and there is no existing supply to resist this particular demand. That's why easily. And what about the next one? Next one, the 15-minute zone is looking good. Let me show you. That's why I have drawn a 15-minute zone there. See, we have a leg-in candle, a medium size or a little smaller than the medium size leg-in candle, and then we have a small, very teeny base candle, and then we have a hidden body. If you add the hidden body, it is going to be a drop candle. But what is the price structure of this area? To understand this price structure, we should get into 5 minutes time frame. But TradingView is not allowing, because trading, if you take uh, paid service, that is premium service, premium package, it will show you last 20,000 candles for the 5 minutes. For any time frame, last 20,000 candles. And this is which date? So 21st April, the 5 minutes data is not available. That means 20,000 candles are completed before this on 5 minutes time frame. But 15 minutes time frame, some more candles are there before this. So we are able to see on the 15 minutes time frame. But without analyzing the price structure on 5 minutes time frame, how do we take a decision? Because we have seen many times we have an excellent structure on 15-minute zone, but when we looked into the 5 minutes, the price structure is not at all good, and thereafter we have seen those zones were easily violated. So that is the reason why it's better to avoid trade on this zone. Not only this stock, any stock, if the data is not available in the trading view, the safest thing is just ignore that stock. We have other stocks. We can plan our trades in those stocks. That's why National Aluminium simply ignored it. I have simply ignored, because I don't know how the structure is going to be. But see what happened? The zone is violated. So this is the way we escaped. Otherwise, we don't know how the structure is going to be. If you would have taken, by ignoring the 5 minutes, if you would have taken a trade, definitely it would have been stopped out. We just avoided the stopped out trade. Similarly, one more stopped out trade also we avoided, that is L&T Mindtree. Okay, before that, a few more stocks are there. Let me show you. The next one is Wipro. Wipro, we got a successful trade, and after that, the zone was broken. Wipro is a 75 minutes, in a daily time frame. In this daily time frame, we identified a 75 minutes high liquidity zone. This is the 75 minutes high liquidity zone. Sorry, we are looking in the 15 minutes time frame. Let me go to 75 minutes time frame. Yeah. So here we have a drop and 3 base candles and again a drop. So we have adjusted this zone to type 2 proximal level, so that this zone is exactly with inside the daily high liquidity zone. First of all, this itself is a 75 minutes high liquidity zone, and it is a fresh zone. Okay, what is that we have to do as per our high liquidity zone strategy? You have to go inside the 15 minutes time frame. So let us get into the 15 minutes time frame. So this is the 15 minutes time frame. So in this 15 minutes time frame, we identified a leg-in candle, that is a drop, two base candles, and again a drop, leg-out candle. So how your zone looks like on the 15 minutes time frame? Your zone will be looking like this. And proximal type 2, it will be looking like this, your zone. Because the risk is high, what we have to do? We have to go to 5 minutes. 5 minutes, there are two reasons why we always go to 5 minutes. Always remember, why we go to 5 minutes is, there are two important reasons. Reason number one, to minimize the risk. And reason number two, to identify the price structure in 5 minutes. In 5 minutes, if the price structure is not good, we don't take the trade. Because there are higher chances of violating that zone. That's why always we have to look up to at least 5 minutes time frame level. See, 5 minutes we have identified. A leg candle and one base candle and a leg out candle. That means a leg in. Leg in is a rally candle, and then we have a base and leg out, that is the drop candle. So we have fine tuned to the 5 minutes area. See, prices entered inside the 5 minutes area. The morning, it entered in the 9:15 5 minutes candle. Let me show you in 1 minute so that you will understand in a better way. See, this is there in the morning 9:15 candle, because why I am showing, some people may avoid trades on the 9:15 candle just to avoid the morning gaps. Sometimes what happens, prices will violate the zones with a gap. That's why they place the order only after market opens. So even then you got an entry in the next candle, continuously three candles, including the 9:15, four candles, you got the entry, one of these candles. So after that, what happened? The prices went down, 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 until finally reached the 15 minutes zone. Let us get into the 15 minutes time frame. The target is 15 minutes. Here we have a 15-minute zone. We have a rally candle and we have a base candle, and then we have with a gap, we have a leg in. You add the hidden body from here. If you add the hidden body, you will get a rally candle. So that way we identified this is our So after it get the entry, then what happened? Again, prices came down and then further moved up, and finally it broke. After that, the demand is increased. Why the demanding is increased? See, here we have a leg-in candle. This is a leg-in candle. And again, institutions created a new base and a leg out. With this leg out, this zone is violated. After that, this entire 75-minute zone is violated. That means a new demand institutions created. Before that, our trade is executed and we got the profit. And Wipro has given 4,575 rupees profit, which is 3.94% ROI, close to 4%. Return on the investment for one future slot. So this is about Wipro. And after that, we have one more stock, India Mart. And the prices did not enter into this fine-tuned zone, because here we identified the zone. Let me go to the how we fine-tuned, let me tell you. So inside this zone, previously we have got a supply. Again, this is a leg in. This entire thing is 15 minutes zone. We have a drop candle, 1, 2, 3, 4 base candles, and then we have a leg in. Again, prices entered here, again went up. That means this is 15 minute zone is a high liquidity zone. It is holding the prices. Not only holding the prices, see again, it created a new demand. We have a drop, 2 base candles, again a leg out. See again, we have base candles here, we have a leg out, the drop candle, 4 base candles, again a leg out. When such kind of things happen at high liquidity zone, such kind of price action takes place. That's why this 15 minute zone is a high liquidity zone. Because the risk is high, what we do? We go to the 5 minutes time frame. In the 5 minutes time frame, we are finding the actual horizon. What is this actual horizon? Like this. This is the 5 minute zone, and which is a fresh zone. And this is just a rejection before this zone. That means there is a heavy order flow is there in this area. And prices haven't entered yet to reach into this area. And today also prices did not enter. That way we didn't get the trade. But the point you have to observe how I am analyzing the charts. That is what you should understand. Whether we got the entry or did not get it, that is a different story. First, we are in a position to prepare our charts before the trading day starts. See, the moment I generate demand and supply zones, what I do? All these stocks near demand zone, especially the high liquidity zones I will select. And you know our strategy from higher time frame, high liquidity zone, I go to 75 minutes, from there I go to 15, and finally the last zone I go is 5 minute zone. There I stop. I will verify the structure and I will try to minimize, keep on minimizing the risk. And most of the times, the prices are reaching our fine-tuned area. See, today we got 4 entries. Today we got 4 entries. In all these 4 entries, prices entered into the fine-tuned area. And the 2 stocks we avoided the trade. And why we avoided the trade in 2 stocks? Because either price structure is not good or risk is not supporting. Already I have shown you one stock, that is Cholamandalam Finance. There the data is not available. So, and one zone price structure is not supported. In another zone data is not available. So that's why we avoided. But there is another stock, the next one, L&T Mindtree. Let me show you, this is a 75 minute zone. See, it is violated today. Why it is violated? Because the price structure is not really good. First, let us go to this 75 minutes time frame, you will understand. 75 minutes, we have an excellent zone. This is identified by our stocks near 75 minute supply zone. So 75 minute zone is very good. We have a leg in, we have 2 base candles, and then we have a leg out. And moreover, this 75 minutes is a high liquidity zone. But this high liquidity zone will really work or not, we will identify that by fine tuning up to 5 minutes level. Because we identified a technique to find if a zone is really going to work or mostly it will be violated. One such kind of technique we identified. So we are validating all the zones as per the technique. If the price structure is good, we have higher chances of getting success because all the zones are inside high liquidity zone. If price structures are not good, even though it is high liquidity zone, mostly that will be violated. That we are confirming by doing manual analysis. Because in any software, you cannot expect 100% perfection with the help of the software. Always human involvement is important. That's why in the strategy, what is the strategy, high liquidity strategy? Yesterday I explained around 7 steps. All these 7 steps we have defined how to make use of the high liquidity zones and trade to get successful, to get a successful trades. And as per that strategy, we are going one time frame below. If it is 75 minutes, one time frame below, that is 15 minutes. If the 15 minutes is again we are finding one more time frame below, that is 5 minutes. But if you look into this chart, this zone looks excellent, no doubt in that. But what is the problem? Risk is high. Because risk is high, what we do? We go one more time frame below, that is 15 minutes time frame. What happened? Sorry, we have to go to 15 minutes. I'm searching in 5 minutes. The stock 5 minutes data is not available. Why 5 minutes data is not available for this stock? Because this zone is created in April 2022. And TradingView is providing only 20,000 candles for 5 minutes. 20,000 candles come from starting from today for the last 1 year. Mostly for 2022, October month only all the 20,000 candles are available. Before that month, the data is not available. If any zone is identified before that zone, we can't analyze the 5 minutes time frame. Okay, now if you look into this stock, we have excellent drop candle, and then we have a, see here, we have a drop candle, we have a base candle, and then we have a leg out candle. So generally, how do you draw the zone? Like this. But what are our rules for drawing the zone? In drop based drop, you should look for highest wick of the base candle and leg out candle. Because leg out is having highest wick, we are drawing the zone up to this highest wick. Highest wick. Because you have drawn the zone up to the highest wick, what happened to the risk? Risk is increased. So to minimize the risk, type 2 entry we are taking. Still the risk is high. Even if you adjust to type 3, still the risk is very high. Then what you have to do? To understand the price structure, you have to get into 5 minutes time frame. But unfortunately, 5 minutes time frame data is not available. Because it is not available, we are ignoring. Because if you can't analyze the 5 minutes, you will not be in a position to tell what is the price structure. Is the stock is going to be successful or is it going to be violated? If the 5 minute structure is not a good structure, what happens? The zone will be violated. See today what happened to this zone? It is violated. Just the zone is violated. Because the data is not available, he simply avoided taking a trade in this zone. Maybe the structure would not have been a good, great structure, price structure. That's why easily violated today. So that is the way we avoided two trades today. One is L&T Mindtree and National Aluminium, and both these zones are violated. Even we didn't get trades in this zone due to the risk factors and also not having the availability of 5 minutes data. If 5 minutes data is there, we will be in a position to tell how this based on the price structure of that particular 5 minutes zone. And the next one is Siemens. Siemens is also a 75 minutes time frame zone. We have a leg candle, we have 3 base candles, and then we have a drop candle. And this one we have fine tuned to the 15 minute zone. See, we have a excellent, a beautiful leg in candle, that is rally candle, then we have a base candle, and then we have a drop candle. And again this one we have looked into this 5-minute zone. See, 5 minutes data is available. So we have a leg candle, base candles 1, 2, 3, 4, 5, 6. 6 base candles are acceptable. And then we have a drop candle. So no issues with the number of candles here. If the candles are more, suppose if you want to consider, this is also a leg candle, a medium, even though they are a little less than medium size candles, still sometimes you may consider this is a valid leg candle. Even then, you have 1, 2, 3 base candles are there, 1, 2, 3, 4 base candles, and then we have a drop and follow through candles. So that way this zone is an acceptable zone. That is the reason why because this is a valid zone, see, the moment price entered into this zone, how it pushed the prices down. At morning 9:25 minutes candle, it gave the entry and reached the target at 10:45 candle. At 10:50 candle. Within 1.5 hours, the trade is finished, and which has given 8,205 rupees profit. 8,205 rupees profit, which is 7.8% ROI. Everything looks excellent, right? But there is an issue. I don't know how many of you noticed. The RR is not good. The RR is close to 1:2. Only 1:2 trade. But some people will even trade based on 1:2. They are highly experienced people, professionals. They know when to trade. But for us, it is not acceptable, right? Okay, here 1:2 is not an issue. The risk is the issue. You know what is the risk of this zone? 4%. What is the risk, maximum acceptable risk for each trade? It is only 2% on our capital. If your risk is more than 2%, you should not take the trade. Still, if you like the zone, what you have to do? You need to reduce the risk by going to type 2 or type 3 proximal entry. See, for our high liquidity concept point of view, this is successful. Because high liquidity zones are having very powerful pending orders. They push the price down. So it pushed nearly 7.8% ROI level it pushed. So that way zone is successful. But as an individual, if you want to take a trade, it is not acceptable trade. This is an important lesson you have to learn. So what you have to do? You have to fine tune. Even if you go to type 2 level, very minimal it is adjusted. So then what you have to do? You have to go for at least type 3 entry. This is the way you have to fine tune. Now risk is minimized. See, earlier it is the double the risk. It is 4% risk on your total capital. Now 50% we reduced by going to type 3 entry. Now probably this is going to be within the 2% limit level. The highest wick of these base candles. We have 4 base candles, 1, 2, 3, 4. The highest wick. This is the way you fine tune. Now you go to the most recent data now. Did you get the entry? No, you did not get the entry. You missed the trade. But if you take higher risk, yes, it is a successful because most of the times we look inside 15-minute zone. If not 15, again you do in a 5-minute zone, week to week or type 1, type 2 entry, but this is type 3 entry. Why we are going for type 3 entry? Because the risk is high. That way we missed the trade. Previously also we learned when you go for type 3 entry, there are higher chances of missing the trade. So if you miss the trade, you have to accept. You should not feel a huge profit I missed. What would have happened if suppose you accepted 4% risk and if the trade is went against you, you might have lost 4% of your capital. Please remember, in any trade, the maximum acceptable risk is 2%. Maybe sometimes 0.1 or 0.2 is acceptable beyond 2%. That is a different story. But as per the theory, maximum acceptable is around 2% or less than 2%. So this is a high liquidity zone point of view, it is a successful trade. But for our risk management point of view, it is not at all an acceptable trade. This is an important lesson you have to learn from this talk. So this is about the stock analysis. Now let us analyze let us generate the demand and supply zones for all the time frames. Today is also the end of the week. We will generate complete demand and supply zone reports for both weekly and daily time frames. For the remaining time frames, let us generate the stocks near demand and supply zones. So let me start generating the report starting from weekly time frame. Entry time frame is weekly. Let us find the stocks which are near to the weekly demand zone. So these three stocks are filtered. Let's go back. Entry time frame is weekly. Let us find the stocks near weekly supply zone. So these 5 stocks are filtered. Let's go back. Entry time frame weekly. Let us find the stocks where price closed inside weekly demand zone. So these 8 stocks are filtered. Let's go back. Entry time frame is weekly. Let us find the stocks where price closed inside weekly supply zone. This is the filtered list. So total 52 stocks are there inside weekly supply zone. So let's go back. Entry time frame is weekly. Let us find the stocks tested during this week. Tested demand zones. So 7 weekly demand zones are tested during this week. Now let's find tested weekly supply zones. Entry time frame weekly. And let us find the tested weekly supply zones. And these stocks are tested weekly zones, weekly supply zones. So total 19 weekly supply zones are tested during this week. Let's go back. Entry time frame weekly. Let us find the stocks having newly created weekly demand zones. And these 30 stocks are having newly created weekly demand zones. That means it indicates a lot of demand during this week. Let's go back. Entry time frame is weekly. Let us find the stocks having newly created weekly supply zones. Only 3 weekly supply zones are created during this week. So this is about the filtered list for the weekly zones. Now let us generate demand and supply zones for all the stocks in the weekly time frame for the reference purpose. So entry time frame is weekly. I am generating the complete list of demand and supply zones for all the weekly stocks. So I will keep on scrolling this list. Whichever the stock you want to refer there, you please pause the video. So this is the complete list of the stocks having all the weekly demand and supply zones. Now we will shift to the daily time frame. Let us generate demand and supply zone reports for the daily time frame. Entry time frame is daily. Let us find the stocks which are near to the daily demand zone. And these 5 stocks are filtered. So any high liquidity daily demand zones. So there are no high liquidity daily demand zones in this list. Let's go back. Entry time frame is daily. Let us find stocks near daily supply zone. So these 7 stocks are filtered. Any high liquidity supply zones? Yeah, we have CUB is there. PEL is also near daily demand zone. And Punjab National Bank is there. Punjab National Bank is already tested 4 times. And the SBI card is there, but it is a PSR zone, so we don't bother about this stock. So these are the high liquidity zones in stock near daily supply zone. So let's go back. For entry time frame daily, let us find the stocks where price closed inside daily demand zone. So these 13 stocks price closed in daily demand zone. Let's go back. Entry time frame daily. So let us find the stocks where price closed inside daily supply zone. Let me keep on scrolling this list. So total 45 stocks are filtered where price closed inside daily supply zone. So let's go back. Entry time frame is daily. Let us find the stocks tested the daily demand zones. So these 7 stocks tested their daily demand zones. Let's go back. Entry time frame is daily. Let us find the stocks tested the daily supply zones. This is the filtered list. So total 21 daily supply zones are tested. So let's go back. Entry time frame is daily. Let us find the stocks having newly created daily demand zones. So this is the list. So total 22 daily demand zones are created today. That means these 22 stocks are having newly created daily demand zones. Let's go back. Entry time frame is daily. Let us find the stocks having newly created daily supply zones. So these 3 stocks are having newly created daily supply zones. So this is the filtered list. Now let me generate demand and supply zones for all the stocks on daily time frame. Entry time frame is daily. I'm generating all the demand and supply zones for all the stocks. So first 17 in this list are indices, and remaining all are equity stocks listed in F and O category. I will keep on scrolling this list down. Whichever the stock you want to refer there, you please pause the video. So this is the complete list of the stocks on daily time frame. Now let us generate a demand and supply zones for all for the remaining time frames. Now let us generate stocks near demand and supply zones starting from yearly time frame. Entry time frame is yearly. Let us find the stocks near yearly demand zone. No stocks are there. Let's go back. On yearly time frame, let us find the stocks near yearly supply zone. No stocks are filtered. Let's go back. Now let's start let's generate for half yearly time frame. Entry time frame is half yearly. Let us find the stocks near half yearly demand zone. So one stock is near half yearly demand zone. Let's go back. For half yearly time frame, let us find the stock having half yearly supply zone. So one stock is near half yearly supply zone. Let's go back. Now let us generate stocks near demand and supply zones for quarterly time frame. Entry time frame is quarterly. Let us find stocks near quarterly demand zone. So only one stock is near quarterly demand zone. Let's go back. Now quarterly time frame. Let us find stock near quarterly supply zone. So one stock is filtered near quarterly supply zone. Let's go back. Now let us generate for monthly time frame. Entry time frame is monthly. Let us find stocks near monthly demand zone. So one stock is filtered which is near monthly demand zone. Let's go back. Entry time frame is monthly. Let us find the stocks near monthly supply zone. So these three stocks are near monthly supply zone. Let's go back. And weekly and daily we already generated. So let us start with 125 minutes time frame. Entry time frame is 125 minutes. Let us find the stocks near 125 minutes demand zone. These 7 stocks are near 125 minutes demand zone. 125 minutes time frame. Let us find the stocks near 125 minutes supply zone. So these 8 stocks are filtered. Let's go back. We'll generate for 75 minutes time frame. Entry time frame is 75. Let us find the stocks near 75 minutes demand zone. So 8 stocks are filtered. Do we have any high liquidity demand zones in this list? Only one stock is there. That is M&M Finance. It is a fresh zone, low on the curve, and 75 minutes time frame is up, but weekly is down, or sorry, daily is down, but weekly is again up. RR is it is almost 1:1, but we will fine tune in the lower time frame. That way we get RR. So this is about 75 minutes time frame demand zones. Let's go back. Entry time frame is 75 minutes. Let us find the stocks near 75 minutes supply zone. So 10 stocks are filtered. where price is near to the 75-minute supply zone. So let's find high liquidity zones. Nifty media, but it is an indices. And we have Bosch, which is a high liquidity zone. And we have Britannia, is already tested 2 times, is a high liquidity zone. And again we have IDFC, but it is already pierced zone, so we don't bother about this stock because it is having pierced count 1. And next high liquidity zone is JK Cement, and it is a fresh zone. So these are the high liquidity zones from 75 minutes time frame. Let's go back. Now let us generate for 25 minutes time frame. Entry time frame is 25. Let us find the stocks near 25 minutes demand zone. So 2 stocks are filtered. Let's go back. Entry time frame is 25 minutes. Let us find the stocks near 25 minutes supply zone. So these 2 stocks are filtered. Let's go back. We will generate for 15 minutes time frame. Entry time frame is 15 minutes. Let us find the stocks near 15 minutes demand zone. So 5 stocks are filtered. Let's go back. Entry time frame is 15 minutes. Let us find the stocks near 15 minutes supply zone. So 4 stocks are filtered. So let's go back. Entry time frame is 5 minutes. We will generate. Entry time frame is 5 minutes. Let us find the stocks near 5 minutes demand zone. So these 9 stocks are filtered. Let's go back. Entry time frame is 5 minutes. Let us find the stocks near 5 minutes supply zone. So 8 stocks are filtered. So this is the complete list of stocks near demand and supply zones, apart from the complete list we generated for weekly time frame and daily time frame. So let us all meet again in our next video. Thank you.